Market to Market is everywhere you are. Subscribe to Market on YouTube, find us on the PBS video app to stream on demand, and add our 3 podcasts on your favorite podcasting app.
Coming up on Market to Market. Bridges and roads get another look from Congress. Cattle producers and meat packers are called to Capitol Hill. Restoring wolves to the upper Midwest. And market analysis with Matt Bennett next.
What's the most complex industry on Earth? It's not genetics, or meteorology, or logistics. It's a business that involves them all. It's farming. Thank you, farmers, from Pioneer.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. This is the Friday, July 30 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Brooke Kohlsdorf. Paul Yeager is on assignment this week. After being stuck inside for more than 15 months, it's clear that consumers have returned to their previous buying habits. Consumer spending increased 1% in June, helping push back against the pandemic-fueled recession. Orders for durable goods moved 0.8% higher last month as more purchases were made for cars, computers, and consumer electronics. When the purchases of cars and airplanes are removed, new orders increased 0.3%. Overall, the U.S. economy grew at a solid 6.5% annual rate last quarter, largely driven by vaccinations and government aid. The American Society of Civil Engineers gave U.S. infrastructure an average grade of C- in 2020. Closer examination reveals roads, levees, and inland waterways received a D. Congress has been battling for months over how to fund infrastructure improvement, but forging a bipartisan agreement has not been an easy one. Peter Tubbs has more.
On this vote, the U.S. Senate has voted to start working on their version of an infrastructure bill that was the centerpiece of President Biden's 2020 campaign. The Wednesday night vote on the procedural step was bipartisan, passing by a 67-32 margin. Work now begins on the $1.2 trillion proposal that includes money for everything from airports, roads, and bridges to grants and loans to states for the deployment of broadband to underserved households.
Every American believes that roads and bridges, ports, waterways, even our digital infrastructure needs to be updated. They know it because they travel on those roads, go to those bridges, deal with the challenges of not having Wi-Fi to be able to do your schoolwork or your work or get your health care.
We're touching every element of infrastructure. If you're on the rails, if you're in a car, if you're basically wanting to get on internet, your bridges and your roads, everything, airports, we've touched everything here. This is what's bringing America together, knowing that we can do something that's been needed for so long.
The 700-page proposal faces an uncertain future. While 17 Republican senators voted to move forward with the bill, their votes for final passage are unknown. The bill contains funding spread over 8 years, including $550 billion in the first year after passage. Roads and bridges are targeted with over $110 billion and over $70 billion aimed at modernizing the electrical grid. Other projects include money for improving railroads, water treatment facilities, flood control systems, and port infrastructure. The focus on broadband connectivity acknowledges that what was once a luxury good in urban areas is now an important part of business and farming in rural America. Over $2 billion is slated for expanding access to help farms and Main Street businesses utilize tools and systems that were previously out of reach. The timeline for a vote on the bill is unclear, and the Senate version would have to be approved by the House before reaching the desk of President Biden. Congress is scheduled to begin its August recess on Monday, August 9th. For Market to Market, I'm Peter Tubbs.
Accusations of collusive behavior and price fixing leveled against U.S. meat packers have led to more than one investigation in the past 6 months. The potential remedies have included introduction of a bill in Congress to increase price transparency. This week, meat packers and producers were called to Capitol Hill to shed more light on the subject. Josh Bittner has more.
In the wake of recent ransomware attacks, the coronavirus, and ongoing consolidation issues impacting the livestock industry, this week the Senate Judiciary Committee brought together lawmakers and corporate leaders.
The COVID-19 pandemic, where there have been problems with supplies, wasted crops, and shifts in consumer spending, have shown a bright light on the cracks in our food system that need to be addressed.
The most significant challenge facing our industry today is labor availability.
Proponents of independent cattle production said with just 4 major corporations wielding control of about 80% of the domestic meat supply, monopolistic practices are top of mind, and black swan events have been misconstrued as the root causes of current financial disparities.
I think it's unfair to say that they're causing the problems that we have, which is this great big discrepancy between what our cattle are worth live when we sell them and what they end up worth as retail beef.
Farm state lawmakers argued better regulated fiscal structures regarding meat processing would level the playing field via robust price discovery at the sale barn, as opposed to contractual alternative marketing agreements, or AMAs, which favor large packers.
How do you justify making such low bids when you're turning such a significant profit?
Thank you for the question, Senator. In the upper Midwest, a larger percentage of cattle feeders prefer to use cash basis as a method to sell their livestock. And as you go further into the South, they prefer the AMAs. So the AMAs guarantee a market for these specialized cattle, but they also ensure that the producer is compensated for the value that they add to the market.
Cascading effects on grocers, workers, and consumers also dominated the conversation, along with ways to tweak existing legislation and align with President Biden's recent executive order promoting competition across all American markets.
As we forge ahead here and look at some of these specific industries, we also should try to find common ground on some of these changes we can make in general to the laws, because then it's going to be another industry, and then it's going to be online travel, and then it's going to be something else.
For Market to Market, I'm Josh Bittner.
According to the U.S. Environmental Protection Agency, there are over 1,300 endangered or threatened species in the United States. In the past few decades, the near extinction of one of those native species has grabbed the attention of both friend and foe alike. Colleen Bradford Krantz has more in our cover story.
Michigan wildlife biologist Brian Roll keeps a list on his computer of important wolf dates.
We actually, throughout the early 1900s, kill every wolf you see. They were a bounty animal. All the way up to 1956, we felt there was probably fewer than 100 wolves in the Upper Peninsula. And just 4 years later, the whole bounty was actually removed from the state of Michigan.
By the end of the 1960s, gray wolves had all but disappeared from the region, with one small pocket remaining in northeast Minnesota's Iron Range. In 1966, wolves were listed under the precursor to the Endangered Species Act.
As things changed, both ecologically and socially, people started to realize that predators were an important part of an ecosystem.
By the 1980s, wolf populations began to rebound across Minnesota, Wisconsin, and Michigan. Roll says exceeding planned population goals should have, at the time, resulted in wolves being removed from the endangered species list. Instead, a series of administrative changes and answering lawsuits meant the wolf's status on the list in Michigan whipsawed, changing 7 times in an 11-year period. In January 2021, the U.S. Fish and Wildlife Service removed all gray wolves, with the exception of the Mexican wolf, from the federal endangered species list. But both the Biden administration and several environmental groups are now attempting to have the decision reversed.
So it's been this yo-yo movement that I don't think has helped wolves. All it does is build this animosity that we can't do anything. We can't protect our own livestock. We can't protect our pets.
Roll says when those lawsuits succeed, the rare wolf found hunting lambs or calves can only be dealt with through non-lethal means. Nearly all of those measures eventually stop being effective.
If we could empower the farmer to do some of that work, it grants wolves, some approval rating that I can deal with that. But when they're this hands off that even though they're killing cattle, I'm not allowed to kill that wolf, that creates the animosity. And what they do is they tell their neighbor tells their buddy, and then it just snowballs. And so people have this belief that, wolves are rampantly killing livestock, which isn't the case.
250 miles away in Minnesota, wolf numbers are strong and their territory is expanding. State wildlife officials estimate the wolf population in early 2020 was about 2,700, almost 2/3 of the total in the western Great Lakes region. One research team is getting up close and personal in Voyageurs National Park near International Falls, Minnesota. Their trail camera footage has helped draw attention to the wolves' gradual return. With the delisting, killing a wolf can be an option for resolving problems with livestock, but it must be the solution of last resort.
When wolves are causing problems by eating sheep or eating cattle or hunting dogs or pets, which they've been documented to do, no one wins, right? It's a problem for the owners of those animals. It can be an economic problem. Wolves don't win because often USDA Wildlife Services will come in and trap and lethally remove wolves as well to mitigate that conflict. So I think everyone has a shared interest to minimize that.
Wildlife experts have a range of non-lethal options, including guard animals such as dogs, donkeys, and llamas. If those fail, streamers, lights, and alarms could be used to frighten wolves. But none of these work every time.
You have folks who raise livestock who think the only good wolf is a dead wolf, and you have folks who absolutely enjoy and are thrilled by wolves on the landscape where they're operating.
Cattle producer Keith Carlson is learning to coexist with the wolves, which have returned to his Sandstone, Minnesota farm, about an hour south of Duluth.
As a youngster growing up, if we ever heard of or seen a wolf, it was very, very rare. It was probably in the past 20 years or less that we've started to have to deal with wolves that are in this area. There's many producers or ranchers throughout this area that have had wolf problems within the past 10 years. It seems to have gotten even worse.
Carlson says the challenges are offset a bit by government reimbursement for livestock killed by wolves. However, the evidence must be clear that a wolf was responsible. Recent years have been quieter, but the summer of 2019 was a tough one for the Sandstone, Minnesota producer.
We had 5 confirmed wolf kills, and I'm saying we had 8, but we couldn't prove the other 3. But we do have agencies that work well with us help verify that it was a wolf kill.
Carlson says some Midwest residents felt misled in the past when population goals were met, but it didn't result in delisting.
They all came to an agreement, that's kind of what's frustrating for us.
Roll says the January delisting should ease that concern, but he believes the legal battles are far from over.
To me, it opens up attacking the whole Endangered Species Act. And I certainly don't want to see major changes made to the Endangered Species Act because of one species. When you look at wolves in Minnesota, Wisconsin, and Michigan, it should be a celebration of the Endangered Species Act, not used as a tool to keep them perpetually on the list.
For Market to Market, I'm Colleen Bradford Krantz.
Next, the Market to Market report.
Rumors of renewed buying by China and weather made for mixed markets. For the week, September wheat gained 11 cents, while the nearby corn contract fell 9 cents. A large purchase of soybeans scheduled for an unknown destination and a dry 10-day forecast left the September contract flat by the final session. September meal dropped $1.80 per ton. December cotton lost 54 cents per hundredweight. And over in the dairy parlor, September Class 3 milk fell 58 cents. A mixed week in the livestock sector. October cattle gained a nickel, September feeders shed 73 cents, and the October lean hog contract fell 4.60. In the currency markets, the U.S. dollar index lost 50 ticks. September crude oil gained $2.35 per barrel. COMEX gold lost $3.80 per ounce. And the Goldman Sachs commodity index moved more than 12 points higher to finish at 541.55. Now here to provide insight is one of our regular market analysts, Matt Bennett. Hi, Matt.
Hi.
Yeah, thanks for joining us.
Absolutely.
All right, so the first question, we're going to head to social media. We got one from Vance Krager. He said yield estimates are too low. Is it really only Iowa and Illinois production that matters?
That's an excellent question. And I would say this year is going to be really tough to quantify what your final yield's going to be because by all means, Illinois and Indiana, I think as advertised, have pretty good crops. Indiana, in my opinion, could be a record. Illinois probably could push on a record, maybe not quite a record. There's going to be several wet holes and not ideal conditions from one side of the state to the other, but it's pretty good. Iowa, definitely kind of a mixed bag, but I still think the Iowa corn crop overall is in pretty good shape, especially if they get rain this weekend. It's ultra important. The thing is how do you quantify with the dry conditions in North and South Dakota and Minnesota? Obviously, Minnesota is typically in top 5 states for corn production. You can't ignore the fact that they've had a real deficit of soil moisture. So I don't think Iowa and Illinois are the only ones to consider or to think about, but I would say maybe to try to answer the question, it's going to be tough and it's going to take some time to try to get a handle on this yield. I'm not to the USDA's 179.5 by any stretch right now, though I do think we'll probably have a record crop of 177 or better.
Okay. So our next question sort of comes from you. The last time you were on the show back in April, you said that we could expect some fireworks in the market. With spring wheat now leading the way, are these the fireworks you were expecting or hoping for?
Yeah, you know, the thing about spring wheat is that they just have had terrible weather, you know, for that spring wheat crop. And then you come in here this week and you see the spring wheat tour and come out and they say 29 bushel yield. The 5-year average for this tour is about 43 bushels. So you're looking at about a 14 bushel smaller crop. And especially when you're talking about 43 to begin with, substantially smaller than what we're typically used to. The total U.S. wheat crop is going to be smaller. We know that. Canadian wheat crop is likely to be smaller from what estimates are coming in at. World wheat is going to be kind of steady, but whenever you see that much in the way of weather issues with the spring wheat issue, there's no question that the fireworks were going to happen, especially whenever you look over to corn and soybeans. We've had a lot of crazy weather this year, wild disparities from really good to really bad. And whenever you see parts of the country not getting any rain whatsoever and carryouts as tight as what they are, the fireworks are not anything that surprised me.
Yeah, and you kind of mentioned corn. Are we going to see fireworks with corn too?
Well, we've already seen fireworks, in my opinion. Yeah, you know, and so this time of year, heading into harvest, you know, we're probably 6 weeks away from harvest really getting a good start. Yeah, there's going to be corn picked early on this year, especially chasing early premium. I think everyone knew that we were going to be running very tight as far as corn stocks were concerned. And so with that being the case, a lot of folks tried to get after it early this year, planted some early maturing hybrids. But for me, it's a tough time to get bullish, especially whenever December corn's 550. My opinion, as you watch this market, it's just kind of chopping around. I don't really see any reason that that's going to change, you know, unless we get into a situation where China steps in with big purchases again, or we see a broad rainfall pattern change, a shift where everyone gets a lot of rain over the next 2 weeks. By all means, that could be detrimental towards prices. But otherwise, I look for a chop in the corn market, kind of a sideways pattern with no clear direction right now.
Okay. So moving on to soybeans, this week the crop rating for soybeans dropped 2 points. It is dry, obviously. Is this the only thing that's going on with soybeans, the only factor right now, or is there something else?
Not necessarily. You know, I think whenever it comes to soybeans, relatively speaking, you're talking two different things. Okay, soybeans are an August crop. We know that it's going to take a while until we find out what this crop looks like from a yield standpoint. Corn, we've quantified more of that crop already. We know some areas are going to have a big crop. Soybeans, we don't really know that anyone is going to have a big crop, especially in the heart of the Corn Belt. So we need to get another 2 weeks under our belt, maybe a couple of good soaking rains before we can start to say we think that this is a 50 bushel national yield or better. Right now, the forecast doesn't look all that great, but I think part of the reason why beans got beat up so bad on Friday is that it was raining in the northern plains. It was raining in parts of Minnesota, and there's a cooler pattern advertised. So it kind of takes the heat off these beans, gives them a little bit of a breath of fresh air, and maybe they can wait on rain just a little bit longer.
Yeah, okay. So over in the meats, we saw live cattle finish higher for the week. What's helping with that move?
Well, you know, numbers. So last week, you know, placements were like 92.9, you know, and the market was expecting something in excess of that by about 3%. And so, you know, basically you've got supply just a little bit lower than what people have thought. Boxed beef kind of bottomed out this week. And so I do think a lot of the supply issue or the supply bullish information is already into the market though. And so I don't look for cattle really to move substantially until they get more news. At this stage of the game, fats, in my opinion, over 120 are probably rich enough for the time being, but at the same time, I don't necessarily see them going down substantially.
Okay, so feeders were lower. What's going on there? Is part of it just this new COVID variant that we keep hearing about and concerns about production?
I'm not sure as far as feeders being off that would be the issue. It's part of it, no doubt, because people are going to be afraid, hey, are we going to shut down restaurant demand, you know, and that would play in more into fats. But anybody who's buying feeders has got to be thinking about what are fats going to do by all means. Feeders, as far as the cash market's concerned, they've been on fire. People are trying to get a good deal on the feeders. They're just not getting them. And so $160 feeders, in my opinion, with feed costs where they're at, but the producer has to hope that you stay in the high 130s out past the first of the year, because if you don't, I just don't see a whole lot of black ink there. So I think in the short run, no, yes, that's probably got a little bit to do with it. The other thing that's got to do with the feeders backing off is that we got into the 160s, and that's plenty rich right now.
Where do you see consumer demand going? Is it going to continue to stay pretty high?
That's a tough question. I mean, you know, bottom line, people wanted to get out and do things. We know that this summer. Want to go out and spend a little bit of money, get out and take a vacation, go out to eat. I mean, anybody who's tried to go out to eat over the last 2 or 3 months has found out that if you didn't have a reservation, you're in big trouble if you're anywhere near a city. So yes, people want to get out and do things. If there's shutdowns, I think people will be a little more hesitant this time around. And so I think consumer demand will remain intact more so than what it did the last time around. But you can't think that if you have shutdowns, it's not going to affect demand. So that's something we have to keep a close eye on. I don't know what this COVID situation is going to turn out like any more than anyone else does. But my thought process is that we're not going to have near the fear factor that we had before, and it'll keep consumer demand fairly strong.
Okay. This week, there was some unsettling news that was coming out of the Dominican Republic. The African swine fever was discovered there. So week over week, the price has dropped. What do producers need to know to be protecting their investment at this point?
You know, well, front month hogs still in the 106 area to me is a pretty healthy price. I mean, historically speaking, we don't spend a lot of time over $100 hogs. And so, yes, ASF in the Dominican Republic is fairly concerning. I think the last couple, 3 times we've heard ASF, it was out of China, and then within another week or two, we talk about rapidly expanding pork production. And so, you know, I think as long as we can keep it contained, I think most people in the industry feel like the ability to contain ASF this time around would be better than last time around due to the measures and protocols we put into place. I've got to think that maybe we're going to stay a little more grounded. I don't think that the hog market's going to completely fall apart. At the same time, I don't want to be buying $106 hogs.
Do producers need to lock in their feed needs right now?
I mean, the thing is that you've got to be careful here, because if this crop doesn't finish well, and I'm talking soybean crop, soybeans are probably not going to go down substantially, because if you don't finish well in the month of August, you're probably going to be looking at some price appreciation. If that's the case, it could spill over to corn as well. And so my personal opinion is they at least need to be locking in a healthy portion of it. Maybe not 100%, but I would definitely be pretty aggressive.
What about fuel needs? same?
Fuel needs, they're tough. I mean, for fuel, obviously, we've come up substantially over the last 3 months. I know a lot of people locked fuel in last spring, but would I lock them in going into harvest right now? I think I'd probably give it a little bit of time as far as fuel is concerned. I think the time to really be aggressive has passed, and so I want to let this play out just a little bit.
Okay. What about your pick on commodities? We'll finish with that.
What's my pick on the best commodity to rally? And I think a lot of it's going to be weather dependent, but this past week, if it was any indication, this wheat market's fairly strong. But I do look for soybeans if the weather does not get any better, if we stay dry and any heat comes back into the forecast at all. I expect big fireworks in the bean market once again.
Okay. Thanks, Matt, for your insight. As always, we appreciate you being here. That will do it for this installment of Market to Market. We will talk more in Market Plus, so join us there. And you can find it on our website, markettomarket.org. We have shared many of your posts in our stories section of our own feed of Market to Market shows. Follow today to see the pictures. And next week, we look at how U.S. farming operations are struggling to find labor. Thanks for watching, and have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's the most complex industry on Earth? It's not genetics, or meteorology, or logistics. It's a business that involves them all. It's farming. Thank you, farmers, from Pioneer.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.